For more on the condition of the jobs market, old and young, we can speak now to the CFO of Britain's largest recruitment company, Paul Venables. Hi, Paul. I mean, pre-tax profit almost 30 million versus 150 or so last year. We know what happened last year, but you're sequentially getting better. That's an important distinction to make, isn't it?
I think there's two parts to these results. Actually, our underlying profits are down about 50%, and we outperformed all of our competitors in that year. But you're right, that was the recession. Now, what's happening now? What we saw in the second half of the financial year is our net fees were up 8% and profits were up 23%. But more interesting, in the last quarter, in 20 countries in the world, activity levels are more than 10% up. So whilst there's not many more new jobs being created, people in the white-collar professional staffing area are beginning to look for new work.
So no net new jobs being created besides Asia. And Asia's where it's all happening, isn't it?
I mean, for example, our business, we are more than 100% up in activity levels year on year. We've had all-time records in Japan, Hong Kong, Singapore and China in the last 6 months. And fundamentally now, we just have a shortage of good candidates there. What have we done? You know, we've increased our own headcount in our business by 60% over the last 9 months. So strong Asia recovery, lots of banks hiring, etc., creating net new jobs. Outside of Asia, it's more about musical chairs, people returning to look for work, moving from one company to another.
Where are the weakest markets in the 28 nations where you're present in the world?
By far, Ireland is still the weakest market, because whilst in the UK we've seen strong recovery in the private sector, offset by falls in the public sector, in Ireland we've seen little or no recovery at all. So Ireland's the hardest.
The UK is your key market. We know that the government is going to offload, 500,000 public sector employees over the next 5 years. Can the private sector take up the slack, or is just that not going to happen?
I think the real case will be what's the level of GDP growth that we see over the next 3-4 years. At the moment, the way our large private sector companies are reacting is if somebody leaves today, they will replace them. What very few of them are doing is increasing their headcounts. At the moment, if 200 to 500,000 jobs go out to the public sector, whatever that number is, that's not going to get picked up by the private sector. But if GDP hovers around 2% for the next 2 to 3 years...
Which you think it will?
I think there's enough possibility. I mean, we are seeing quite strong rebound now across the whole of the UK private sector. When I was here 6 months ago, it was only London. 3 months ago, it was London and the Midlands. Now it's across the whole of the UK.
And accounting and finance is the key, and you're seeing a big rebound there. But back to what sort of levels? Pre-crisis levels? Where are we relative to the peak?
We're still about 30-35% off the peak if we take accountancy and finance. The flip side of that is in public sector, which again we've got a large business in. We're about 30% below the peak now. It's the same again. Good people aren't moving from one authority to another, and authorities are not looking to hire permanent workers.
One more question, Paul, very, very quickly. We did have a package there on Spain, youth unemployment 40%, mass unemployment 20%. You're number 2 in Spain. What is the underlying current of the Spanish jobs market?
There's no doubt that employers, I think the piece was excellent, because employers are very cautious. By bringing new people into permanent employment, they give them significant contractual protections, which is financially exposure for them. But what we are seeing is in our Spanish business, we're more than 40% up now in the last 2 months. So we are seeing a lot of people in the accounting and finance area looking to change from one employer to another, but they are being very selective which companies they join.
Are you getting a sense in Europe that a double dip, that the austerity measures implemented by the Spains, the Portugals, the Greases, are you getting a sense that might tip these countries or the economy as a whole into recession?
No,
you're not getting that at all?
We are seeing none of that from any of the clients that we speak to. And if you take somewhere like Germany, we're seeing almost the reverse. It's not far behind Asia in the level of growth we're seeing.
Unemployment's fallen 14 consecutive months, hasn't it?
And I think that will continue. We are seeing a real skill shortage there. And the beauty about German growth is it then drives through into Eastern Europe. So we may have some pockets in the southern part of Europe which will be more difficult for some years to come. But Germany's strong growth will certainly help protect a large part of the region.
Paul, wish we had more time, but thank you very much for joining us.